Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, on Friday, the Australian dollar finally took its toll to the downside after breaking out of its 7-week bullish streak. With the support being crushed at 79.90, the market plummeted from 80.43 high on Friday to a low of 79.17 and now reaches its objective of 79.35. With current weakness still in play, could see a move towards 78.95 today, but do be a little bit cautious from the bear side because we do have tomorrow the RBA rate decision. It is the first one for 2018 and the market participants will be eagerly to wait and see what the RBA is thinking when the statement's released. Last year, the Governor Phil Lowe did note the fact that the next move in rates will be up rather than down. So if we start getting a bit of a hawkish statement out of the statement, then we could see further indication that the grounds of a potential rate hike is coming this year, maybe in April, from my view. As you can see, the shooting star is still in play, and with the market now looking towards 123.50, could see further weakness from a break and look towards 122.65.75. On Friday, we did see a slightly upbeat job and employment number released in the US, with the non-farm payrolls revealing 200,000 jobs were added in January. The expected forecast came in at 181. But nevertheless still a good number and did promote the US dollar slightly, with the unemployment rate still holding at 4.1%. But do note the average hourly earnings was slightly better at 0.3% month on month. From the recent price action, and especially if the US dollar can retain its bullish momentum from Friday, then we should see further weakness, as I mentioned, with the resistance coming in at 124.70. Talking about the US dollar and dollar yen, the fact is that since clearing 109.85 is the fact that we are still looking up for this week to 110.80.85, with support coming in at 109.85. With the histogram about to give us a nice confirmation to a bullish move, we should see further advances for the start of this week. Well, the pound did slip and is slipping. As you can see, the market is looking now towards a target of 139.90. With any advances to foul. We do have this week, though, two important numbers, one being the PMI today and the other one being Bank of England interest rate decision on Thursday. Although policymakers are not expected to make any changes to the interest rate, but the statement could still influence some whippiness in the pound. Overall, I do expect to see 139.90 as a target, and any advances should find a cap around 141.5. Well, the gold took a whopping fall on Friday, and it was $22 in total after printing low around $13.28. For the start this week, I do expect to see further weakness and could see a move towards 1,320 to 24 before rebounding, with the resistance now coming in at 1,336. Silver also took a big heavy hit and now challenges this level of $16.60. Now, failing to get any rebound from here, could be looking down towards $16.40, with the resistance on the day coming at $16.75. And to wrap up with oil, the market slipped away from this $66 handle and now looks towards 63.5 as a target, with potential of even going lower to 62.60 and reassess from there. Any advances should find a cap on the day around 65.65. So that wraps up for today. Thank you very much for joining me, and I hope you have a wonderful start to the new week.